As we start the week, let's take a look at Bitcoin price. Bitcoin at around $62,000, up about 1.4% or so. S&P, gold, silver, euro, yen, renminbi, and oil, all trash assets in comparison, because when fiscal and monetary policy is out of control, people need a store of value that protects their purchasing power. And that is exactly what we're watching happen with Bitcoin. If we go ahead and we look at the individual stats of the network, $1.16 trillion market cap. Very, very high and growing. The inflation rate, 1.78%. There's 89% of the supply that is in circulation. About $10 billion was settled on chain in the last 24 hours. One of my favorite statistics is, what is that mining reward value? The Bitcoin miners were paid $56.2 million over the last 24 hours to secure the network. The Bitcoin network is the most decentralized, secure, largest, most powerful computer network in the world. And that $56 million getting paid out to the miners is a big part of it. We are now about 4 to 5% off of the all-time high. The all-time high is around $64,800 or so. And my guess is that we are going to break that shortly. Is it going to happen during the show? Is it going to happen tomorrow? Is it going to happen this week? We will find out. If we go ahead and we look at the return on investment with Bitcoin, you can see that it's up 418% over the last year or so. What's very interesting is right around this point, 4 years ago, people are now up about 1,000%, depending on when we screenshot this exactly. And so if you had bought Bitcoin on this day in 2017's bull market, and you held it and rode it through that 80+% drawdown, and all of the volatility along the way, you now would be up about 1,000% or 10x. If you bought gold last year, you've literally lost 7% on a nominal basis, and you are down double digits on a real return basis. If we then go ahead and we look at Bitcoin versus the other select indexes and assets, you can see that Bitcoin is compound annual growth rate, that CAGR right there, compound annual growth rate over the last decade has been 170%. Absolute astronomical performance for the digital currency. Now, when we start to look at these statistics, most of this is looking backwards. But what is very interesting is there are tons of signs that suggest that Bitcoin is about to go parabolic. Now, what do I mean by that? You can look at the actual market structure. You can look at the on-chain metrics and ask yourself, what is this setting up for? If we first look at the actual number of Bitcoin that are on exchanges, we can see that from 2012 or so, the number of Bitcoin on exchanges has drastically dropped. That's that yellow line that's falling from the sky. We then have kind of oscillated there and continued to remain at very low levels for quite a while. But what you can see is that since September or so, since September, you can see that we've been down here around these all-time lows. Now, over the weekend, we saw a slight drop right there at the end. You can see that slight drop in the actual number of Bitcoin that are on exchanges. As you can see, usually when that occurs, there is an increase in price. Why? If there's tons of Bitcoin sitting on exchanges, it's very easy to sell it. It creates selling pressure on the price. But if people are going onto exchanges, they're buying Bitcoin, they then take it off of the exchange. And so the number of Bitcoin on exchanges, or the exchange balance, is going down. That suggests that there is more long-term holders, and therefore increases in demand lead to an increase in price. And so very positive to see that we are remaining somewhere near those all-time lows from when it comes to exchange balance. On top of that, this morning from Charles Edwards, we got this tweet that suggested that the MVRV Z-score has reclaimed 3. Now, for those that don't know, MVRV Z-score is essentially the difference between the total market cap and the realized market cap. Total market cap simply takes the number of outstanding Bitcoin times the price per Bitcoin. That's what you see in that $1.16 trillion market cap. But what the realized cap is, it looks at when was the last time that this Bitcoin actually traded hands and what was the price at that moment. So if I last sold a Bitcoin, let's say to Joseph, at $1,000. That would count as $1,000 towards the realized cap versus the $62,000 that it would count towards the market cap. And so when you look at the difference between the total market cap and the realized market cap, and then you divide it by the standard deviation of the market cap, you can score it. What we know is that when we cross over 3, it usually leads to a drastic increase in price. And we just reclaimed that 3 there. And so when we see these types of movements, there usually ends up being a market structure that has a very bullish story behind it. But last but not least, Dylan LeClaire coming out and showing that the long-term holders are still in accumulation mode. Even though 85% of Bitcoin has not moved in the last 90 days, long-term holders are still buying more. And he said that typically we see these during bear markets or consolidation periods. But instead, we are watching this happen as Bitcoin's price has doubled over the last couple of months from $30,000 now up over $60,000. So to see those long-term holders continuing to accumulate into price strength like this is very, very bullish. And so when we start to look at what is actually occurring in the market, and because of the on-chain metrics and that open, transparent ledger that Bitcoin provides, we can see that not only has Bitcoin been very strong over the last 10 years, over the last year, but also the market structure and the setup is very interesting. Now, on top of that, we've got the Bitcoin ETF coming. We're going to talk about that later in the show. But also, right before the show started, Interactive Brokers announced that they are going to allow for registered investment advisors, RIAs, think of these as more financial advisors. They are going to allow them now to buy Bitcoin and cryptocurrencies via their traditional platform. What this does is it allows for every registered investment advisor in the United States using that Interactive Brokers platform to start to give their clients exposure. John, how many different RIAs are there in the country? And do we know how much assets they have?
Yeah, it's just under 14,000, like 13,500. And then what is it? The AUM of them is 110 trillion in like 61 million clients.
So if we talk about 65 million clients with $100+ trillion in assets that are managed by about 14,000 registered investment advisors, Interactive Brokers just opened the floodgates and said, you now have the opportunity to get those assets, that $110 trillion or so, into the Bitcoin or cryptocurrency market. If those advisors choose to simply just move 1%, about $1.1 trillion into Bitcoin, that would be double the market cap of the asset today. So we would go from the 1.1 trillion we already have, plus 1.1 trillion from the RIAs, and therefore you'd have a $2.2 trillion market cap. The amount of wealth that is held by RIAs is absolutely insane. And when we look at the market structure, the fact that it's a highly illiquid asset with 85% not having moved in the last 90 days, and then the MVRV Z-score going over 3, it becomes a very, very explosive situation. You have a similar situation to what you had back in 2020. You've got supply that nobody wants to sell, but you have increasing demand. Not only do you have increasing demand because of the macro environment and sustained levels of over 5% inflation, but you also have increased access points. People who have had high demand for the asset, but they've struggled to get exposure previously. Now they can use ETFs. Now they can also use the Interactive Brokers platform from RIAs. And you put all that demand into an illiquid supply, and it is likely to lead to a very high price increase. Now, history does not mean that that is a signal for what's going to happen in the future. There's risk with all of this, but I like to see this type of market structure, this type of increasing demand with this type of illiquid asset. And so just as we've been talking about for weeks now, Q4 historically has turned out to be very positive in bull markets for Bitcoin's asset. But when you start to add in all of these other factors, not only having the Q4 situation, but also increased assets in the illiquid supply, my guess is that we are going to see absolute rocket fuel poured on one of the best performing assets in the world.